All righty, folks, it is the beginning of 2025, and I thought one of the things we should do is talk to our millionaires each week about what is going on in their housing market, what are they seeing, and of course, what are their predictions for the national housing market, but also their metro, their buy box. Because again, most of you watching this should care nothing about the national housing market, and you should care everything about your buy box. So we're going to dig into this with the one and only and great Casey from Brick by Brick. How you doing, Casey?
I'm doing great, Michael. Thank you so much for having me on today.
Absolutely. Well, let's remind folks, just in case they don't know, where is your buy box? Where do you spend most of your attention? And then we'll get into what you see coming in 2025.
So we invest in Memphis. We live right outside of Memphis in a suburb. And so we are fortunate enough to be able to live where we invest. And I will tell you, Memphis has always been, and people probably know this, one of the top real estate investing markets of all time, right? It's a flyover state. It is a very low cost of living. And, people are surprised when I say you can get a nice house for $200,000.
Yeah, I think Memphis is going to be one of those areas because, again, as a guy who, right, I look at Fresno, California, I look at Las Vegas, Nevada, and then I look nationally. And when I look at nationally, it's very clear Texas, Florida in trouble and have been in trouble for a while. But it's also pretty clear that the Northeast and what I'll call, I don't know, Central, maybe Midwest. I'm not really sure what the correct vocabulary is, but Memphis is there. Been holding up really strong, right? I think Memphis has seen a disproportionate amount of appreciation in the last couple of years. You can still get cash flow. You can live on a median income, get a nice house for $200K. So it'll be very interesting to see what you're already seeing in 2025 and, what are your predictions for what's coming? So what do you see?
So like everyone has seen, the housing market has slowed down. We got a good deal a few months ago in Memphis. I've had some students that have bought in Memphis and gotten some amazing deals. Just like everywhere, especially wintertime, especially post-election, you're able to find deals in a lot of markets and in a lot of neighborhoods that you otherwise wouldn't normally be able to cash flow in. Yeah. Sellers are having to sell, right? You're able to get seller concessions and you're getting tons of money off purchase price. Sellers are willing to fix things. So you're getting a lot more. A lot of my students and people that I talk to on Instagram and even on YouTube now in the comments will say, there's no way I can cash flow. Nothing's for sale under, $300,000. Well, what if that $300,000 house, you got the seller down $30,000 and you got 2% towards closing costs and you got them to fix things. So there's some wiggle room now everywhere that there hasn't been in the future. But unfortunately, with election over, with springtime coming ahead, I fear that those great days are going to be over.
Yeah, I think there's a couple of things that I called early and frankly were right. And that is we're in a buyer's market. And most people, right, in your comments, they don't even know what that means. Right. We haven't had a buyer's market, a legit buyer's market since probably 2012, maybe 2013 in some parts of the country. Every area is different, but it's been a decade since we had a legit buyer's market. And a lot of people starting today just don't remember it. A lot of people look at the MLS or a listing, realtor.com, Redfin, wherever, and they say, oh, it's listed for $299. I've got to pay $299. No, you don't. Maybe in a seller's market, you have to, and maybe in a seller's market, you've got to, pay $310 to get the $299 house. That's not where we are today. And if you don't have experience, let me just tell you how to win in real estate. You win in real estate when you buy. The best time to buy is a buyer's market. Your job is easier in a buyer's market. I didn't say easy. I just said easier. And that is you need to find a motivated seller. Your latest purchase is an example of a motivated seller. It was listed for X for a long time. You wrote an offer at X minus, and you can fill in these numbers to remind me because I don't remember. Then you did X minus because you got concessions and all of that. Folks, if you are out there saying that You can't make cash flow at 299. Awesome. Don't write the offer at 299. Write it at 247, 253, whatever makes sense for you. Your job as a buyer in a buyer's market is to figure out where the numbers make sense. And the last thing I'll say, throw it back to you. I had a buddy of mine who's in the lucky situation to have about $500,000 ready to deploy. He called me over the weekend and said, Michael, I found an office building that I want to buy for my company. And basically, to get to the short end of the story, I said, are you getting a deal? He goes, no, I'm paying retail. I'm like, don't you dare buy that deal. This is about having cash to deploy on amazing deals, disrespectful deals. This cash today is an opportunity cost. So don't pay retail. All right, I'll get off my soapbox.
All right. So one thing I want to say is, since we do live in Memphis, right, we have some of the cheapest housing. We have tons of renters. Unfortunately, a lot of the people out here are never going to be buying homes. So they're going to be renters for life. Prices are staying low, and we're seeing more properties come on the market. So I think in December, there was something like 2,600 properties in Memphis. It's a huge city in Memphis for sale on realtor.com. I try and kind of keep a little tab. And I just checked a few minutes ago, and we're already at like 2,800. And it's only been 2 weeks. So more and more properties are coming on the market. And, I'm always looking for my dream home too. So I have a really tight buy box on what I want to buy. And I've seen 2 properties come on the market in the past week and a half, which is a lot because my buy box for myself is very small. Sure. But there's only been 34 properties. There's only 34 properties in the market for what I'm looking for total. And it has only decreased since October. And it is starting to slowly increase. I think we're going to see more properties come in the market. People maybe they're happy with the presidential choice and positive of where the economy is going to go. And people are maybe thinking, hey, I'm going to make more money this year. Things are looking up. So maybe I will take the risk and buy the property or start that business. When people have hope, they do more, or they don't stay in their shell. They do more things. So my prediction is, unfortunately, housing interest rates aren't really going to go down like people want. That's my opinion. I've been saying it since rates were in 8% or even before that. We're not going to see 5% interest rates. We maybe, if we're lucky, owner occupieds, maybe see 6. Like, that would be so awesome. But if for an investor, that's not enough of a deal or a discount to wait to buy. That's not. Prices are going to be going up. The demand's just not there. And just like what happened when we saw those 2% interest rates, nobody is going to be selling their properties. No one is selling their properties. My house, this one that we bought in 2013, and then we refinanced, I think I have a 4% interest rate. When I buy my dream home, I'm not selling this one. I'm renting it out. It's just not worth it to sell it. The few $100,000 in equity I'm going to get is not worth it. I can make $2,000 a month renting it out. Like, that's such a better deal. And I think a lot of people are going to feel that way. And my property, we bought, this one was $235,000. That's what we bought. Our first home we ever bought, $235,000. And this is an entry-level home for the city that I live in. Imagine the entry-level homes in Memphis at $60,000, $70,000, $80,000. No one's going to be selling those. So we're going to have a shortage of entry-level homes, which is going to hurt investors, and it's going to hurt owner occupants. That means we're going to, in my opinion, we're going to have even more tenants needing homes. So, which is going to create demand for rentals.
Yeah, I think there's a lot in that are probably, I would agree with nationally. And the first one is the intro-level housing, or what I call the move-up buyer, is not going to act like they traditionally did. Traditionally, what happens is after 7 to 8 years, given historical norms, you sell your first home and you buy the next one. It's called move-up. And that person was always responsible for 2 transactions. You sell one, you buy one. That move-up buyer is just out of the market for lots of reasons. Many of them you've highlighted. But also, a lot of folks are going to be like you and just decide, I'm going to keep it, right, at a higher percentage than historical norms, right? I don't know the numbers, but I'll give a ratio for context. Historically speaking, 10% of folks kept their home and rented it. Given the 2, 3, 4% interest rate, we're probably going to see 35 to 40% of people keep them because it makes financial sense, to your point. So the housing market's going to be broken for a long time. Second, where are we going to see the deals? I think we're going to see the deals above the median, right?
Yes.
We're going to see those nice houses come on the market for different reasons, because those are the people with the equity and the livelihoods and the businesses that maybe they're feeling better about the election, and they're going to start making moves, right? Entry level's not coming. Above the median, you'll have some options. And you're right. I'm on record. I think, dude, I don't think rates are below 7. I don't think rates average below 7 the whole year. So higher for longer.
Yeah, I agree. And it does suck for everyone who's really hoping for low interest rates. It really does. But, I think something like this, a 7% interest rate is the 50-year average anyways. So it's even, I won't say holding, we can all guess. But I've been around. I got in real estate in 2007. So I have been through some interest rate cycles.
Some stuff. You've been through some stuff.
Yeah. And, 7% is not bad. People are freaked out with 7%, but I think it's because it's been kind of this high for so long, people are getting used to it. And when we see interest rates not going anywhere, people are going to get back in the game. They're going to start buying again. And 7% will be the new 5% norm, because 5% was the norm for a very long time. If you got a 5% rate, you got a great deal. Anything in the 5s is good. And that was for years. Anything in the 5s is good. And maybe now it's anything in the 6s is, oh my God, you got a great deal. It's just times are changing a little bit.
Yeah. I've studied the consumers for the better part of 30 years, and they're remarkably consistent. And that is in this example. I think what we've quickly learned is 6% is good and 7% is bad. What does that mean? It means demand pulls back above 7 and it turns on at 6. And that's if we're above 7 all year, it's going to be a horrible year for mortgage brokers, horrible year for real estate agents, because transactions will be down. It will certainly get better in 26, 27, 28. So I want to give you some silver lining, but the housing market's broken. It's not going to be fixed this year. In fact, it probably stays and gets even more broken because of the difference in the low end versus above the median. It's going to be a yucky year for a lot of people.
Yeah, I think it is too. And for investors, it still stands. Get a good deal. What is a good deal today? Stop looking at what good deals are from 10 years ago or 5 years ago or pre-COVID, because it doesn't exist. You have to look at what a good deal is today and know that as long as you're cash flowing, okay, eventually over time, the price of the property will go up. And you do need to be in a good neighborhood, right? My advice, don't buy in a D-class neighborhood, and be careful of the C-class. Is it on its way to a D-class? Because those D-class neighborhoods used to be A-class neighborhoods at one point when they were new. Yeah. So watch where your neighborhood's going. Make sure you're buying in an appreciating area and that it cash flows, and you'll be just fine.
Casey, you do a lot of amazing stuff. Where can people find you?
Oh, Michael, people can find me on YouTube, Brick by Brick Wealth. I should have made it Casey Franchini, but Franchini is such a hard name,
Yeah.
And on Instagram.
That's great.
Yes, Instagram too, Brick by Brick Wealth.
Casey, you're amazing. 2025, she called it. Thank you so much.